What's going on, YouTube? Just want to give you a quick little update. I found this article right here on Market Extra, and it says the following. Hedge funds seen facing heavy losses amid wrong way treasury bets ahead of Fed tapering, traders say. So before we dive into this, I just want to go over Investopedia of what tapering actually is for those who are unaware of what is actually going to be coming in the next couple of weeks. So tapering is the theoretical reversal of QE, quantitative easing policies, which are implemented by central banks and intended to stimulate economic growth. So, of course, guys, when the 2008 financial crisis happened, quantitative easing was put in place to help boost the economy. Now, this has continued all the way from 2008 to present date. There was a brief amount of time, I believe, don't quote me on this, in 2018 where they actually tried to stop the QE and put in place the tapering, which is just the stop of QE. So that caused, of course, a lot of downward pressure into the markets. So they extended that QE, and now the talks of tapering come. So why exactly are hedge funds seeing some heavy losses? And of course, this is probably what Charles Gasparino is talking about on his Twitter ramble. But anyways, we're just going to read through this article and see actually what are the issues going on right here. So as a result of steady narrowing in the differential between yields for long-dated U.S. government debt and short-dated ones, traders said, concerns about possible losses come as global yield curves have been flattening, with short-term rates rising at a faster pace than long-term rates have. A harbinger of potential economic trouble. Of course, not great. That's the opposite of what many expected to happen, particularly ahead of the Federal Reserve's policy meeting in Washington next week. So, of course, what's going on? Well, you have these short-term going through the roof, climbing very steadily, and on the other hand, your 30-year is not really moving. So, of course, lots of hedge funds and institutions know that QE is coming because of the inflation talks that have been going around. So they're going to reallocate their portfolio to really meet the demand of this tapering that is expected to happen. But quite the opposite is going on in this market. So that is why you have these hedge funds taking on lots of losses right now. And of course, if we add that on top of my previous video where we talked about the collateral haircuts and that new collection notice coming out for the holiday in 2 weeks, well, now we have a lot of fear in the overall markets and potentially risking those margin accounts. So we'll just jump over to Twitter right here and go over Charles Gasparino's latest thread. So we are hearing 10 to 20 different asset managers across the industry are being liquidated or are under review for liquidation due to the interest rate derivatives. It's a bloodbath. The VIX, equity volatility, looks widely mispriced relative to what is happening. And of course, the VIX is tracking, and really, if we look back at January 28th, tracked very nicely with AMC and GME's rise in stock prices. In fixed income markets, when you have a book that is wounded, they need to sell liquid assets. When you don't allow business cycles to function and you don't allow price discovery in global capitalism for a long period of time, and then academics who don't understand anything about risk, all of a suddenly unleash price discovery too fast, they destroy things. And that is exactly what is happening in the eyes of Charles Gasparino. So, like we said, we do expect some discussions coming out on Wednesday, and here's the calendar of key dates and events going on throughout the week. And of course, here on Wednesday, November 3rd, 2:30, Powell holds the press conference following the FOMC meeting, and the FOMC rate decision starts at 2 o'clock p.m. And I believe this is in Eastern time. Don't quote me on that as well. But, of course, we see some heavy losses with hedge funds here. Well, of course, we may see early next week some long positions being cut due to all of this going on while maintaining your margin exposure going on. So really interesting. And Monday and Tuesday and half of Wednesday are going to be very, very interesting, guys. Expect a very shaky market. But that's it, guys. Be sure to tune in for the next one. Peace out and enjoy the rest of the weekend.